Have you ever wondered who first thought of using computers to make trading decisions? Long before high-frequency trading and algorithms dominated the markets, one man was already light years ahead. This is the story of Ed Seykota, the genius who became known as the father of computerized trading systems. Our story begins in the early 1970s. Wall Street was still a world of ticker tapes, crowded trading floors, and gut feelings. The idea of using a computer for anything other than back-office accounting was seen as science fiction. But Ed Seykota, a young, brilliant MIT graduate, saw things differently. He was working for a major brokerage firm, and he was frustrated. He saw the inefficiencies, the emotional mistakes, and the sheer chaos of manual trading. He believed there had to be a better, more systematic way. So what did he do? In his spare time, on a primitive IBM punch-card computer, Seykota started programming. He began testing simple, trend-following ideas. For example, what if you bought when a price crossed above its 5-day moving average and sold when it crossed below its 20-day moving average? He ran these tests over and over, using historical market data. He wasn't just trading. He was building the first-ever commercial computerized trading system for managing clients' money in the futures market. This was revolutionary. For the first time, trading strategies could be tested, refined, and executed based on objective rules, free from the emotional roller coasters of fear and greed. Seykota's system was designed to identify and ride major trends, a philosophy he championed his entire career. He famously said, "If I am bullish, I buy. If I am bearish, I sell. It is that simple." The key, he argued, was not in predicting the future, but in reacting to the present. After proving his system worked, Seykota left the firm to trade for himself. The results were legendary. According to one account, he turned a client's $5,000 account into an astonishing $15 million over a 12-year period. That's a return of 250,000%. His success was so incredible that it became a major feature in the classic book Market Wizards, which introduced his genius to a global audience. But Seykota's legacy isn't just about the incredible returns. It's about his core philosophies. He was one of the first to emphasize the psychology of trading. He understood that a great system is useless if the trader doesn't have the discipline to follow it. He taught that success in the market comes from three things: a solid trading system, strict risk management, and the right psychological mindset. He famously summarized his rules as 1. Cut losses, 2. Ride winners, 3. Keep bets small. His approach to risk was also groundbreaking. He was a firm believer in cutting losses quickly and letting profits run. This might sound obvious today, but back then, it went against the common wisdom of buy and hold. Seykota showed that protecting your capital wasn't just a defensive move. It was the foundation of long-term success. By risking only a small percentage of his capital on any single trade, he ensured that he could survive the inevitable losing streaks and be there to catch the next big wave. Today, nearly every quantitative hedge fund and algorithmic trading firm on the planet owes a debt to Ed Seykota. The concepts he pioneered, backtesting, systemization, and trend following, are now standard practice in the industry. He proved that a disciplined, systematic approach could consistently outperform human intuition and emotion. He laid the groundwork for the entire field of quantitative trading. So, the next time you hear about trading algorithms or automated systems, remember the visionary who started it all from a room with a punch-card computer. Ed Seykota wasn't just a trader. He was a pioneer who single-handedly dragged the world of finance into the computer age. Thanks for watching. If you found this story inspiring, make sure to hit that like button and subscribe for more deep dives into the lives of market legends. Let me know in the comments who you'd like to see featured next.